section, we're gonna discuss swing trading heavily. And the first thing we want to do is talk about the key levels to remember. So with swing trading, the strategy I use is similar. It's a little more modified, but similar to the quarters theory strategy. And what the quarters theory strategy is, it basically not assumes, but it makes the idea and the assumption that every major significant price change, obviously it's not random, and it has to do with every 0.250 of going here from like 1.77500 to 1.8, then from 1.8 to 1.8250, then from 1.8250 to 1.85, every 250, if that makes sense. And what it says is by every 250 pips, they're saying that is where price usually trades from. Those are the major levels, and that is what the quarters theory is. Now, I've used it and utilized it for the last 2-3 years, and it has definitely helped me be profitable, but I realize it's only should be intended for longer term trades and longer term traders, if that makes sense. Because it makes more sense when like you only have the major levels on it, and you're looking for 250 pips every between every single level. It makes sense that if you got to analyze on the weekly and the daily, even the 4-hour. But scalping out of the question when it comes to these major key levels, and intraday to a certain extent, but a little bit can be mixed, but it's mainly for swing trading. So if we want to get it on right here, every 250 pips, we get this horizontal line at 1.77500, and you can see, let me actually get this white or something. I don't know, my computer's being a little slow right now. Let me just refresh it really quick. Okay, better. All right, so horizontal line, 1.77500, right? We have that here. Let me make this at least blue or white or something just for now. I'll make it white for now. So now we have another one at 1.8 flat. And then another one at 1.82, which is exactly where price is trading at right now, 1.825. And then one at 1.8500, which is way up there. Cool. So these are our 4 major levels. And you can see that what it basically means is that when price breaks here, it's going to get here. It breaks here, it's going to the next one. And this fell a little bit short, and it came back up, but it came back up to retest this mid level, which I haven't even gotten into yet. But what you should know is that between every single major level, if it's a good amount of distance, like a good amount of significant pips, always try to have something in the middle. Always. Like, try to take the difference between this and here, the actual distance, and place something in the middle. And you can do that by just either subtracting this from here or getting the Fibonacci tool, excuse me, and placing it from here to here. And then all you gotta do is get just for like a 50, like a prominent halfway point. That's all you gotta do really. But another news, that is what the actual key level theory is. So what we wanna do is, as usual, draw, little lines over here so you can see it clearly. And let me even do one better, make it on a lighter chart really quick. No, not upscale. I meant original swaggy chart. Yeah. All right, cool. We have it there. Oh, and the other ones are white too. Oof. 825. I see it right there. Cool. We get black now. Great. And then 80 flat. Yeah, I can't really see where it's at right now, so I'm just going to draw another one. So I made it white. I don't feel like changing my charts back to, actual black just to do it. You got black there, 8250, and then 85 flats. Delete this here. And then we have one right here, obviously, as well, that I think I should be able to see. Yeah, I do. We have our 4 levels. So what we're gonna do is draw, nice thin boxes around these 4 and have these as our main levels. All you simply do is try to trade them from level to level. If it breaks one level, and you want to sell it or buy it to the next, depending on the bias, your take profit should always be that next level, no matter if prices have momentum, and you either scale back in or you take partial profit and let the other half run. Right now, prices, hesitating at this 1.825 level. But the key level strategy suggests in terms of string trading is that if price were to, resist off of here, we're looking to head 250 pips down to 1.8 flat. And again, if it breaks that, we're heading down here. And same with over here. If it breaks above here, we're looking to head 250 pips in the up direction. At the very least, like I said in series 2, which is why I said, your take profit should be the Fibonacci, previously wicked areas, and support and resistance. Our support and resistance are set, but sometimes you see our price stopped 1, 2, 3, and that can be somewhere, near the mid-level, stopped here as well. But this is an area where I'd be curious to see what price, does. But yeah, that's really all the key level strategy is. And all you do is you start on a weekly, you see what the price was to do overall. Okay, GA has been dropping since April. Dropping is coming back up just a little bit. It can get to 1.85. And then you see over here how it wicked over here as well. So knowing it can get there. Sorry. I'm making these videos late at night. I just yawned. Very, very tired. I'm trying to get these videos to you guys as fast as I can. And you guys been waiting. But right now you can kind of say price is kind of overall consolidating. But remember, this is a swing trading session, so this is actually pretty good. An idea you can have is wait, and then when price breaks out of the box one of these ways, it is going to go so far. If it breaks above here and closes above here, it is going to go all the way. I can see it getting to 195 or 193, back to what it was a few weeks ago. And if it gets below, I can see it going lower. But that is what you want to do. You want to place a trade, look at the weekly, see what price is doing, look on the daily, make that trade. And when you make that trade on any of these time frames, nothing less than a 2-hour time frame for swing trading. But if you're looking at any of these time frames, you need to be looking at how long do I want to hold it, and you got to have the idea in your head and understanding that, hey, this may be a trade that I got to hold for 3-4 days. Meaning, if price were to go down and you have it going all the way down here, and you see price going up, don't be scared unless you think it's an actual reversal. And there's ways to clarify that, which I do clarify in the first series 1. Don't be upset. Don't be scared. Don't do anything. Like, understand that it has to come back down. If it plays with your bias, it doesn't have to do anything. But if your bias is correct based on what you analyze, don't be mad when it does this. Mind you, these are counter trend trades, easily counter trend trades. The overall trend is obviously, here down. This is kind of like bad drawing. I'm not good at art, but you can see clear as day that at the end of the day, it's still going to get to that, that price point and that level that you assumed it was the first time. So you always want to hold your trade for 2 days, 3 days, 4 days, especially if you're a swing trader, because holding it for a certain amount of days and just letting price do its thing and you really don't got to worry about it, that makes it more automated, as opposed to coming in every single day, trying to find a trade every single day, which can be very, very profitable, and even more profitable than swing trading as well sometimes, because you're in and out so much. It can also provide for more losses because just like that, you are in and out so much. Whereas the swing trader may be holding on to, a certain pair for about a week or a week and a half or 2 weeks or 5 days, where you're getting in and out. So it's only about, it's only a matter of how much the trade plays out. Because if you see on a daily time frame, like a reversal, or even a weekly time frame, most likely a weekly, chances are that's going to give you an indication on what price is going to do going forward. Like, you see this doji right here, I would not be surprised if price had all the way up here back to this level over here that price was at. And the only reason I had said that oh my gosh, I am getting out of it. I've been making videos all day. I'm in my 16th, 17th hour. So it's maybe my last video before I go to sleep and come refreshed in the morning. But the main thing you want to make sure is that if you're a swing trader, you are analyzed on the weekly and the daily. Weekly maybe a little bit too far. I would get weekly as just like a general outlook, but the daily for sure. And then obviously I would enter my trades on a 4 hour or 2 hour if I'm a swing trader and I'm looking to hold it for a certain amount of time. Like I said, if you get in and out like a scalper, you will have more losses. You may have some, maybe some bigger wins, but I doubt you have bigger wins on a scalp. Intraday trader may have bigger wins because he's in and out every single day, every few hours, but he also could have bigger losses because he's, in so many trades. Whereas a swing trader, on the other hand, does not have the stress of that at all. They place 1 trade a week, 2 trades a week, 5 trades a week, and they have it automated for them. And for those who are interested in swing trading, I would say the account size you need to have is at least 10 to 15K, preferably 20 or 25K, but 10 to 15K will do. And all that it's about is having the breathing room, just having the breathing room to let your trade breathe. Once you feel like you have the breathing room to let your trade breathe, then it's a whole new world for you. Like you realize you're not as emotional as you was before. You're not as scared. You're not as, extra as you was before. You're just good to go because your stop loss is in place and your risk to reward ratio is great. And you know that based on the last weekly candlestick, price should be heading up or price should be heading down. And you will feel really good about your bias, the more you just let it play through without any interruption, unless you really feel in your gut it's a reversal. So